Hey guys, how are you? How are you doing indeed? Hello and greetings. So after a nice little bit of travel, we come back. We had come back to a world where real money is reasserting. I like a bit of that. I like to see the heat in the fakery and the fuckery and all the other messing arounds that go on. The dollar itself, not so strong since its sudden U-turn, which we've delved with in great cases. So let's have a look. What's the chart I've got up in front of you? Well, first of all, it's the silver. Now, before we get too far into this, in fact, I should remind you that on Market Sniper, the channel, a while ago, we did a number of what I'd call a full-blown reset version of videos that was all about, hey guys, guess what? There's a full-blown reset in motion and the stress indicators are there. These are the macro trends. And if we go back to that, this was done about a month ago. You can see gold and precious metals are bull about a month ago. And this was all around the big problems that I saw coming. The next great recession and the great macro rainmakers also a month ago. If we have a look at this video, this was about gold reasserting, high yield being in trouble. I went through the gold silver ratio. I did the platinum, as you can see from this comment. I literally have my entire reset list here that I worked through, the recession and depression crash list, and who's the big winners in that environment. And I mentioned, as I did in the other video, that gold was bull better part of 4 or 5 weeks ago, and that this is the macro bull, that in fact we bottomed on 16 in gold. So let's turn that into silver. We bottomed around about the same point, January of 2016 in gold, and you can see it was December of 15 in silver. We revisited a deeper dip in silver, but that silver is now going to be the higher beta mover. And this is its first little moment. You've got to remember, for those of you that think, oh, this is a little flurry, this particular commodity stroke money, real, and it's in my FX category, not in my commodity category, has had for itself since then, back in 2011, and silver peaked a little earlier than gold that did September. Silver peaked almost to the fullest 8 years and a couple of months before. So we peaked before July on silver in 2011. We're 2019. You are talking about a bear and bottoming market that has gone on for 8 years, guys. Here's your 8 years. Now, a month ago, we were saying it's going to be bull, and the silver, when it turns, will be the confirmation thereof. It's already a bull for precious metals. And if you're missing the gold, because the gold had moved a little bit, but it hadn't done what it's done today, this week, and the last 2 weeks, where we've been strongly long and benefiting greatly from that, silver was still, winding up. So this is a weekly chart to capture all of this history. I've thrown down a few of the big key levels as well. So there was a little bit of a descending triangle there. There was a nice wind up here. Now, I traded during this period. Now, on gold, we actually had a big macro HVF. You can learn all about that in far greater detail by going to the website. And it had a $1,300 target. And I also traded silver in and around that period, where you could have still got silver around 18. And I had a $32 target. And I sat and watched, after a small pullback back to this key level of 27, it go all the way to 50. And if you want to make money and feel like you've lost money, watch something go on a whole bunch further. And what I forgot about was that at that point I was developing our overperformance theory of HVF method, and it really only followed after that. And being a macro setup, overperformance was possible, and I'd closed 100% of my target. Again, you can find out more about what I'm talking about through our website. And gold did the same to me. It was a 1300 close and it ran to 1927. I should have traded with overperformance. That became new theory. It's developing all the time. And it was unique. But when you get extreme overperformance in anything, especially with a melt up, doesn't matter what the underlying is, you eventually get extreme levels of underperformance. And if you get a major melter boom, you will typically end up with a long, precarious bear that will dry you out big time. Now, cryptos, which are notoriously like dog years, 7x, people absolutely died with the death of crypto for December 2017 Bitcoin all the way to the actual bottom in December 18, and only confirmed and bullish more recently in and around the end of March going into April, where it started to move, and you still wouldn't have treated as much. So I am calling, and I have already called, that as the extreme bottom for silver as of 16, beginning 16. It was actually December of 15 for silver, but it was 16 for, and that was the China crisis. I described all of this and told you what happened. This was now China becoming super indebted. They managed to keep the genie in the bottle for a while longer, particularly on silver, and it came almost as close far. This is incredibly low volatility, and I've highlighted the squeeze. This is a far more significant break than it looks like now. Remember, many big moves start with a candle like that and then go and go and go. And the key element about the Great Reset and the debt and the proliferation is that interest rates are going down. Buffett's big argument that gold and silver pay you no interest is becoming less and less creditworthy as we head for negative interest rates. Here's something that will still be there tomorrow, won't be proliferated and doubled up. In other words, every time they double the amount of currency in circulation, your buying power is halved. You can't double the gold, you can't double the silver. It'll still be there tomorrow. And actually, if you don't use the on-grid storage, you can bury it in a hole in the ground for nothing more than a bit of sweat and tears. It doesn't have to cost you storage costs. Put it in a bank and your money is going to be eaten away by both inflation and the fiat proliferating Ponzi scheme that is in play. So this is highly significant in silver. I kicked off with silver because many of you may have missed the start in gold, and I'm here to tell you, you've not even missed the end of the beginning. We're still in the early parts of the beginning, not even the end of the beginning where we get into the main part. If this turns out to be the Great Reset, that it may well be, you could end up even 10x that 50 mark that you just about missed or didn't quite make. You could end up 5x, you could be any God knows number, and they might even make it illegal before you finally get a black market price. Who knows where we might go if this turns out to be the extreme reset that it may be. But remember, there will be a time to sell. I'm not a believer, and there will be a time to sell, and that's what these people forgot. An absolute hyperbolic moonshoot is the beginning of the end, and we learn about that again, and we teach it in theory. And when you're at your giddiest and you're making your most money is when you need to be your soberest and actually taking off, and people don't realize that. So that was silver. We're going to run you past the gold for today and how it's gone. And if you had bought, you could have got in a month ago. Let's just flip this to a monthly chart. You could have got in last month, anywhere over here. The close of the month, you could have got in at sub 15. A large part of the month, we were below 14 and a half. Where you could have got in at 14 and a half, 14s, most of that month. $14. You've just smashed. Let's take you through the technicals now. We'll go drop down the time frame. You have just smashed, as we flip down to the daily, through a double bottom neckline. You've just smashed through it. Yes, so let's crunch this up a little bit, get a little bit more of the data. There's quite a big jump between a weekly and a 7 day. I actually like, by the way, you can do this. Go to custom and you can do a 3-day chart. Yeah, there's no magic about the rules. It's a bit of an extreme jump to have one seventh of the data and then suddenly 7 times more data. So if you want to expand it, you can take that halfway step. So what have we got here? If I just redraw the pen again, and this is still on silver, we'll do the same for gold. This is your precious metals check-in. This is your precious metals check-in. Come on, give me the pen. Let's see how we do. So what you've actually got after a head and shoulder low neckline. Hey, how funny is that? A key level of significance on a round number, aka 16. What happened? Yep, you would have traded down there just a little short of 13.5. So you would have carried about $2.5, just a little bit short of 2.5. From 16 would have taken you to 18.5, but just a little bit short. your double inverted head and shoulders would have given you that spike. Then you went into falling wedge type structure or descending triangle. You broke the descending, you return move to the key level of significance. Again, that's already been shown significant. Yes, it's been shown significant many times. Now you have this W bottom. That's your neckline. That was a small little tip-tap toe at that neckline. Again, even your one W of your W had a fractal of it. But the whole point of this is typical double bottom analysis will give you the next level it looks like you could be on for. 14 was broken to 16, so you're slightly bigger than 2 onto your 16, you're going to get a move up to 18. What do you think gold will be by the time silver's at 18? It'll be moving, but this could be the higher beta, and this is the first of many targets I suspect will be run. So remember, we called the low a while ago, over a month ago, of the silver market as of 15. Was it 15? Did I say 15? Did I mean the December 15? Yeah, the beginning of 16 there. Now, I think you could have got silver actually with a $13.6. That was an awful bear market. And let me just tell you, I'm very sympathetic to bullion and being real money. But I said so many times, I've been on many bullion guys talk because they know I criticize fiat policy and I'm ideologically a friend, but I'm not a believer. Many people were saying, buy the whole way down. And these are the people that lack the understanding of technical analysis. Buy here, buy here. Sorry guys, bad structure, it'll break down. Buy here. Sorry guys, bad structure, it'll break down. Okay guys, there might be something happening here. Whoops, look at that rally. Whoops, we shouldn't have come back all the way though, guys. Hang on, let's see if we get away. No, we keep getting sucked back. This is bad, guys. It's going to turn bad again. No, you must be a pool metal. No, we've been bearish throughout the period that it merited being bearish. And now I am putting it forward that once again, as per a month ago, you should definitely be a bull. So some point around June, you would have got into the silver anywhere around here. And this could be something that could even take out that in time. That's not going to happen overnight. It's not going to happen overnight. And the one thing they hate is disorderly markets. They'll even create lying stats about how many people are employed to put the brakes on gold and silver. All the commentary will be, silver and gold has gone up, but... all the articles I've seen is, but. No, there's not going to be too many ifs and buts about this one. If you're patient and you take the long term, you're going to smile. So let's look at that gold market chart because most of you guys are less familiar with the silver. This looks like it's on a log scale. No, it's regular. Made sure. So this was where I was. You know, I traded that HVF way back then, steeply ascending with possible overperformance over here, right there. And I called 1300 and I got out and I watched it keep going. People called me a fool on trade to win for going up. Gold's never going to do anything. Remember, they were used to 3 decades of nothingness and bareness right the way down to 2000s lows, 2001's Brown's bottom. And they thought it had already had quite a big rally just in getting up to these levels. So let's bring it to here. Again, just December stroke going into 2016, the major collapse in the Chinese debt situation saw this run. Now, once again, the people here didn't see the fact that you got to take money off at some point, and you will need to take money off. Be bullish, yes, but you will need to take money off. What's going to happen? Well, I think the dollar is going to be one of the weaklings for a while. Contrary to popular belief, I think it's going to be fairly weak. The Fed had been lying about its intention. In fact, gold is already in breakouts across all the currencies. It's what I said in the big video that you can go watch again. Great Reset in Motion. I did a run through every single currency that is of any major significance, including against oil, platinum, silver, against, I even had lumber, but not gold against lumber. I had gold against copper. That's the one I was looking to receive. We did one of the most comprehensive cross-references of gold. I concluded that actually the trade was Bitcoin against Korean won. That was before Bitcoin really continued its push up, and it's made by far the most money. But for many people, I said, if you're not into cryptos, gold is your strongest currency, money, and yen is going to be your strongest currency, and I maintain that. So for those that are FX traders, be long yen at potentially even at the dollar's cost. It's going to be weak. You can short ruble, you can short USD ruble and get positive carry. You can short USD try for a while and get positive carry, as well as some profits, because the dollar is weak. It's at a moment where it's going to be generally weak. And if we'll go through the crosses, I also recently highlighted, and in that same draw, we did the silver gold ratio, and I said we're in a bit of a blow off move up period here. And it seemed like we tapped out at 93.54. Now, I don't assess that we've ever really gone higher. Some guys have managed to get additional data. I seem to have not been so successful on my trading view. Maybe I'm choosing the one wrong. But the big crisis of 2008-9, we only made it up to 89. So it's my assessment that we've probably made an all-time high, but we might have been close prior to that at the lows of gold and silver, when silver was super cheap. What's happened? Slap in the face, moving down quite impulsively. Now that has happened before, and we did get interested in before, and that was the 2016 indebtedness. Major bear flag down, and I recall it really well. What ended up happening? Back on the bike and moved. They put the genie back in the bottle, supposedly for China, till now. But now everybody's a little bit sick to the same degree. And when we fall out of this rising wedge, out the base here, silver will be running faster and gold, and they both will be running really strongly. So you can still get into silver if you were late into gold. This is just a little flicker of life in a move that could, as I say, see a very high number. That doesn't mean it would take out this without any major pullbacks. You're not going up in straight lines, guys. You never do. There will be key levels of significance that you'll bump into, such as this floor level around here that I've highlighted, around 19. You'll also, you may revisit the 16 after a move up and have a little dip back, and everyone will go, oh, he's wrong, it's not going up. But talk to me again in 18 months' time. Okay, that's the kind of time frame, and then again in 2 years, 3 years, but then things can get most disorderly. But instead of getting excited at that disorderly moment, you should also be aware of where your exits are. It doesn't mean gold 100,000 with no stops. It didn't suddenly become Chainlink or some other small pumped up crypto. Okay, so bear that in mind. So let's go to the gold chart now and talk about it. We'd already referred it there. That was the big break. So we said, great, we love the falling wedge. It was very graduated descent. Take the long out of the break, out of the wedge, and you could have and should have been long at 1280s. We came up, we kissed the psychological 1350 and pulled back down. That's the 134948. So I can scribble that line in for you again in red. This was very key. We couldn't hold for long above it at any point. Quite a few attempts, failed attempts there and there. And this is a major, significant psychological one. Now, we've been talking in our sniper series room about FX and commodities all the time. We've been doing gold. These are our setups. You can click on the individual setups. Gold has been, and silver and the precious metal bulls has been one of the key things we've been talking about. You can see it in our FX and commodity section in this WhatsApp type design. And it is the key one that we've all been talking and sharing, and you can see the setups as well that we've been drawing. So this particular gold chart, if we keep drilling down, let's close that. After that break, we had a lot of structure, all these lines that are confusing. It's so messy. This man's charts are so messy. Yes, they are a working man's charts. Guys that work out have sweaty clothes. People that do technical analysis have charts with proof of their efforts. This structure over here, very powerful. More to go. Buying here. I bought when it revisited the squeeze. Little grind line, we wanted it broken. It came. Marginally lower low here. Big pump up to the key level that it had to run. This 1430 became a key level. Remember, if you put a 1430 line on this, it was doing like it was doing at the 1350 on the bigger time frame. You're battling to get and to hold the 1430 line. Let me get the 1430. Where's she blows? There she blows, 1430. That was a key psychological area as well. So if I get the pencil and do some scribbling, we were battling to get through it. Okay, so here we go, battling to get through, tip over, couldn't quite make it, touch but no cigar, bear, bull flag, pump, bull flag, pump. You've probably made the logical distance from there now, and that's why we rest. You could even have a revisit all the way down and bounce here, both on our funnel or the 1430. You won't like that. Doesn't matter. That'll be a second chance for those that never got in. Doesn't mean it has to, but we had a close and then an open on the Aussie and Chinese session, and that's what you've got. So we've got structure in here that was giving us longs again. So each way you're going to keep getting setups all the way along. My opinion is, for the simple among you that are working, and I mean simple in terms of keeping it easy and simple to adhere to, not simple-minded. In fact, it's very smart and patient-minded. You just want to be net long gold as in your investment. This is not an advice channel. I don't give advice. I'm telling you what I'm doing. And that's what's happened. So leverage longs have paid very well. And if you, as I say, you think you're late, you can go grab the hyper. I showed on the silver gold ratio, when we were on the gold ratio, that the last big dip down in 2009 was from 89 down to 30. If we go from the 90s and we've gone higher, 93, and we crash down to 30 or more, typically when you're volatile, the more you overshoot to the upside, the more you crash. Ask the guys on Bitcoin with the 20,000 run and the subsequent crash down to 3,000. It's volatility. That's what the Fed and all the scam financial system does. It creates immense volatility in the system. That's how they shake you out the game and get to keep all your profits. So with that, be aware. Be aware if that silver gold ratio goes back to, let's get it up to the 30 level, your silver will have gone up 3 times the rate of an already climbing gold. And gold's last run was 1927. Now, 1927, there's a whole bunch of new, bad, silly, printed in the binary computer system fiat that has now changed the game immensely. There's a whole bunch more that needs to be captured by that. And this could be the beginning of a lot more. But we've had a false dawn before. That was China, as I've mentioned. So bear this in mind in terms of that which you're doing. Silver will be there for you to be late. So gold typically runs first. Why? Because the central banking queens are jumping in first. Don't forget, gold is a runaway market against the Aussie dollar. This is the Aussie dollar. This is a structural setup for us and has been for a while. This is how Australia gets out of their housing boom collapse. Devalue its currency, mate. Devalue your currency, mate. Yeah, have a Foster's and double the amount of crypto. It's almost like a crypto. Double the amount of fiat in the system. That stops your houses from going down 60% and busting all your banks. Destroy the fiat. Gold pumps to near all-time highs. In fact, this will be all-time highs. You've got structure for it going up. Nice squeeze, nice break, it's going up. And you think, well, that's Australia. That's just that little big island in the bottom part of the planet. Well, it's more than Australia. Let's have a look at the gold versus the pound. Oh dear, much the same. Much the same, similar structure, even more aggressive. Very, very big squeeze here. There we go. Should have just trimmed the tops. You got to like trimming the garden on your missus's bonnet there. You got to trim the wicks without doing any damage. Anyway, so that's your H3. Oh, it's late at night, you can tell. So there we go. It's past 10 o'clock. The kiddies should all be in bed. So you can project that kind of geometry to the upside. That's going to be a big number and it's new highs, and that is a serious breakout of momentum there, guys. Oh, well, what about the euro? Ooh, not much different either. Similar structure. Have a glance. There you go. Upside, where's your target looking? For us, I'll give you the target on the euro. You can know what we've known for a long time in our community and have been watching. Hedge your euro baby shoes. You could have bought for very close to €1,000. 1-1 over here, by the way, you were barely above the €1,000 mark. You're now at 1-2. You're going to 1. That's a 68%, 1,685. Now, when this quality of structure performs, what's dollar going to be if you're at 1685 on the euro? What's the dollar price going to be? What's the euro dollar? The dollar's weakening to the euro right now, guys. It's weakening to the pound. You can say what you like about the euro and the pound for that matter. It's weakening against both. You know, it's normally about 10%, it may be going on 12, 13. Add that on to 1685, virtually 1700. You're knocking on the door of 2,000. You're knocking on the door of 2,000. Euro. By the way, let's go back and have a look at that GBP. Give you a little glimmer of the target that we have working there as well. What do you get? 1,500. 1,502 pounds. Now, I'm saying we're probably going to kiss the 33 again. 1.33 on pound USD. Pound's been getting a little bit of a free ride with its Brexit story. It's so baked in and boring now. Then we know they're going to cheat like hell. They're going to steal and probably do some sock job. The last thing they're going to do is give the guys a free full break from all the constraints of the Eurozone. The Eurozone would be in immense trouble if they did. So my take on currencies, you may as well have it as well, is that actually we're going to return to 1.33 at some point on the GBP USD, which is going to mean dollar is not doing that great. Remember, you came down here at 116, you went all the way up to 143, back down. Now we've got a hammer. You've got a hammer, you've got a kind of falling wedge type structure as well in here. So here she goes, and that's not the pound being great and strong. It's just the weakness that the dollar needs to keep pumping its stock market up, which I believe it'll continue to do, and keep inflating the love and light of their billionaires casino, and that's what's going to go down. So you've got a bit of a falling wedge structure down there. You're going to pop, look at that hammer, wick buying, wick buying, wick buying along the lows. You're going to get a little bit of upsy, and this is not a bull call on the pound. This is an illustration of weakness in the dollar. You can see this lower wicks buying here, a little bit of a broadening, and down you go, and there's been quite a bit there. You're going to bump and pop, and I can actually see you probably visiting 1 1/3 again. So here you go, you're going £1,500 to gold, add a third onto that, that's another 500, and you have your, if GBP USD is 133, you're at $2,000. That means you're at the 1927 it was before, and potentially through it, just for this little currency move, and the GBP gold making its target. But you've also got a target on the Eurozone as well, making its target. They're all in setups for me. And this is how we were able to give this to you a month ago, and you never listened and you never bought gold. And you never listened and you never bought silver. But now you still have a chance to get silver fairly cheap, and you can still actually get gold, because this could be a big move. But you might want to buy a dip now, because it's just had a big ass evening, which is one of the reasons why I'm kind of, guys are asking me, where you're not talking about it all. So that's where we are. For your reminder, little seeing as I touched on currencies, for your little reminder, this is structure for downside in my view. This is going to lead to, as I've said, sub 90. We will see an 89 something number and potential to fall further. People were like, no, yen's got all this, yen to 200, 300. No, mate, not at all. Not at all. Not at all. Downside for me. And this is soft and weak. The best currency to hold at the moment for me is going to be the yen. I don't want to hold currencies. I want to hold gold. I want to hold silver. Then others will ask, what about platinum? Platinum's going to be the last to turn. It'll be the last to turn. It's having a little rise. Why? Because it's used in cars and people aren't buying cars right now. It's really laden with a lack of industrial demand. But the bullion demand will come in and soak some of that up, but it's going to take a while. So that's my take on platinum. So it'll be the last train to leave on there, but it's got a lot of catch up to do. So if I go to my gold ratios, this is gold against, we'll come to gold versus platinum. This is gold against oil. I said again, weakness in the economy is not good for oil. Oil keeps getting slap downs. It's not really making progress. Gold is the hold over oil. This is gold in valuation against oil. For the modern era that we've had this huge debt inflation, here's your 2008 spike, by the way, even smaller or even larger than the 2008 spike was the 16, which shows how the stress hit the system. You didn't see the beginning of 16 be a big thing. I did that World Vision YouTube saying we're going to go in with fear around China in around October or November of 15, and then it all broke out, and then they had the G8 and they were, oh, we'll let that happen, we'll do this. And all the little shenanigans about the central banking cartel keeping the Ponzi scheme running a little longer. But they're running out of road, they're running out of interest rates, they're running out for other people to print for other people. And we're in an exponential phase of fiat creation. So here's a big move, here's a drift, here's another pump move, and this is moving up against oil. So oil is not near as strong. Oil is not near as strong. If you like to have a look at that, I think it's bearish. I think you could go even further down. These spills are brutal, and here's another downturn. Look at that spill, look at these spills. This shows demand shocks. This is the Rockefeller tax to everything you do. They can tax you when they're making you wealthy by making your houses worth more and pumping lots of debt and liquidity into the economy. They can skim off you then. Now they have to take a bite out of the back of their hand and sell it on the cheap, because otherwise there's no economic activity and the sheeple are going to die. So they've over-milked the cattle, and now they need to feed you some greens. And the way they do that is they reduce the cost on your economic activity tax. That is oil. Economic activity tax, the Rockefeller tax. Oil. And that stays weak while the proliferation of money gets big, and that's why you're facing what you're facing. With gold going up relatively to the others. So I did some other crosses for you against gold. Let's have a little look-see. Where's all the good stuff? Euro, USD, I think that was it. I did a lot on the yield as well. Gold very strong against the ZAR. What I also mentioned, I've done a bit of FX. Dollar's going to be weak against the ruble. The ruble, yeah, you know that one that went from 20s and 30s and actually almost traded 100s on euros and 85s on dollars. This is going to soften, and you can get a positive carry in your trade. You get more interest in your ruble account than you get in your dollar account by some way, and possibly the same for lira as well. This is a weak dollar environment. This is going to add further to the precious metals. So let's have a look at platinum. I thought I had my platinum XAG. Oh, where's the XAU? That was our platinum indicator. I had a platinum against gold. Let's find him. There we go. So here's the one I wanted to show you. So in the same way, because I put platinum first, not gold first, in the same way, silver's a rising wedge, and we've just had the first sign of silver strength with the fallout, the rising wedge on the gold-silver ratio. This is the platinum-gold ratio, so it's the other way around. So instead of being a rising wedge, it's a falling wedge, because both platinum and silver have been slower to respond, and platinum is the most congested because of that automotive demand drying up. For catalytic converters, impounded by the fact that diesels are unpopular and diesels are being taken out of circulation, etc., etc. So what you're actually getting here is a falling wedge that I believe eventually we will, or I assess in time, we will pop out to the upside. You also have to realize that this line here is parity, and that for most of platinum's existence, it trades as for a premium to gold, not for less than gold. It has many of the properties and even greater scarcity. Many of the properties and even greater scarcity. Let me also highlight and remind you that actually at this point high, it traded 2.39 times more expensive. You needed 2.39 ounces of gold for 1 ounce of platinum. Now it's 0.59. You are at a serially low point for platinum. And what also happened is palladium has been soaking up a lot of the demand for platinum, and has mooned, as well as at the same time as industrial use for platinum has turned down, and diesels are no longer being built. New diesels are no longer being built. So here's where we're at. This will be the last one to check out the station, but in my view, it'll have a lot of catch up to do. But I still think you'll get the higher beta on the silver, but it'll have a lot of catch up to do. So you can stay and monitor this ratio. You've actually dropped as low as 0.5. That means you would need almost 2 ounces of platinum to get 1 of gold, when it should be 1 ounce of platinum to get 2.5. And most of the time, as I've said, parity. It's traded above parity. In other words, platinum is the more precious over gold. Okay, so that's your quick uptake of all precious metals versus gold. I also had a copper in here. Where's all my charts gone? It's late at night and I'm battling to locate them. It's a long clip, so I don't want to keep you too long. XAU, let's have a look at that. I suspect that's it. So this was our copper, gold to copper ratio. This is a major structural setup for us. This is a major structural setup. So what am I doing? Here we go. This is going to be a substantial move. That's what copper did in underperformance to gold there, which was, as you know, your Lehman's moment. And that's what it did during 2016 as well, in the lead up to 2016. Not extreme like it was on oil, where there was such lack of demand and oil dipped really strong. Copper still had some. China uses it as a sort of cheap poor man's silver, which is a poor man's gold. So this structure I can see breaking out to the upside, and you've got a nice leg, and I don't even think we've begun the breaking up there. I think this will do that, and then it's going to break out of this. You're going to see gold's value relative to copper go very, very high. Why? Construction will be down. The industrial use for copper will be down. You'll have indebted banks that don't want to give mortgages for property. Property is one of the biggest consumers of copper. And you're going to have a constriction in the banking system, and you're going to have all this crazy money running around, and people are going to realize there's proliferation, and they're going to be big buyers of gold. Simple as that in my view. And I would expect that you're going to go very, very far towards going somewhere close to the 1,000 mark. In other words, gold divided by copper will approach almost a 4-digit number. That could be very, very big. So that's your relative value assessment. I'm not getting into the high yield stuff. This is already a long clip. Thanks for watching. Go to the site. Check our free mini series. It's absolutely free for you to do. Go and enjoy it. See if this is for you. Lots of learnings, totally free of charge. Go and enjoy that. There's a webinar. Go watch an auto webinar if you like. Doesn't cost you a thing. It's totally free. Price of an email. And if you're serious about what we do and you want to be participating, because our guys are greening out, they're paying for their programs and their years memberships for future years, etc., in single trades potentially. Big gains are being made in precious metals. Large sums can be made. Call options are available. We've even in the equities. You can find out which ones are the best with us and have a look at what we're looking at. See you later. Enjoy the clip. Not advice, purely entertainment. Thank you for understanding this key point. Speak to you later and enjoy yourselves. Bye.